3, 2, 1. We're live.
That would have been a good move.
That would have been good.
We were just having a funny moment right now as we were starting off. But you were all shy. Late, I was expecting you to.
Am I blushing?
Yeah. I was expecting you to say something. Tell us.
I don't think I can share that.
Fair enough.
We'll wait.
Thank you for joining us, Hamdy Hamoudi.
Good to be back.
I know, man. I love having you back because there's a lot going on.
Yep.
And I've always been a big fan of your opinion and the way that you observe and analyze things.
I appreciate that.
So, I look forward to kind of getting your insight on what you think is the outcome, or what's the long play? What's the short play? What's the long play?
What are we talking about here?
Yeah, I was wondering.
I mean, always financial. Hamdy is my authority. When I want to bounce investment ideas, Hamdy is one of the critical players.
I would ask him, Hamdy, commando or not commando?
Whatever turns you on is usually the answer to that.
Right?
Yeah.
Okay. Good start.
Let's do this again.
He is the financial authority, though, between our group.
Without a doubt. That's what I'm
100%.
saying is that when Hamdy, whenever we speak and we talk about different things that are happening, his perspective is always one of the perspectives that I take into account when I'm thinking about, what's the right move? What's the next move? So look, we're living in a time now, the major economies are all printing money, right? US specifically. And I'm concerned now, and I think the average person, some people that are knowledgeable a bit, would be concerned with the impact of the quantitative easing to the US dollar and what's that going to mean for the market in the long term. We know that there's a market that's on a bull run right now, but has the feelings of being overheated. Guys, I'm sorry that I'm doing this so seriously because this is something that I'm at right now. I could tell you I've been spending a lot of my bandwidth, a lot of my energy into trying to understand.
I mean, listen, it's been a bull market for a very long time. So jokingly you can say if somebody's been a financial authority to ask, it hasn't been very difficult to call the market if you've been one way, right? Anybody could have been a financial guru over the last 10, 15 years as long as you haven't gone against the wave, right?
Yeah.
So it's been pretty straightforward. Financial quantitative easing has been the right policy for central banks in the face of adversity, right? So you've had difficult times and you have these monetary tools that you have.
But do you feel like once it was done, all you're doing at that point is you're just kicking the can down the road? I know you're just saving the outcome or the impact of that decision later
You're
on.
looking at it from a financial market perspective. You have to look at it from an economical perspective.
Okay.
Is the fact that the Obama administration or the Trump administration continue to heat up this economy a bad thing, or are you keeping unemployment low? You're keeping people earning.
Correct.
And it's been an inflationless bull run, which is magical in theory, right? I mean, usually the tools you have is liquidity injecting into the market, but you're trying to balance it against inflation.
Of course.
Because in theory, if you raise minimum wage in Canada, like we've all gone through, or in the US, it immediately translates to inflation. So it's a zero-sum game.
Yeah.
I'm earning a bit more, but I'm paying more for rice and flour.
Yeah.
So what did I gain? Nothing. If you can do one without the other, that's the ultimate target, right? And interestingly, the components of GDP, without getting too technical, the most interesting one that you can increase successfully and be happy with the outcome is the technology increase, right? Yeah. You can increase labor, you can increase capital, you can increase technology.
Yeah.
If you increase technology, increase GDP while maintaining low inflation.
Efficiency, right?
Absolutely.
Exactly.
So you're getting more units per labor hour.
Correct.
Right?
Correct.
And that's what we've been going through. So I think what's been underappreciated in the midst of all this is what's happening, whether it's in California or whether it's across the world, which is that we've gone through technological advances that are been unheard of.
Absolutely.
In the past few decades. And again, if you go back to the dot-com bubble, which was very disappointing, right? So it felt like something was happening and then it just disappeared. And the internet was very boring for a long time, right? Mm-hmm. Ultimately, if you think back about it, we had Google, we had YouTube. nothing really changed in our lives. The way we transacted, the way we purchased, the way we consumed, the way we worked. There was no gig economy. There was nothing.
Yeah.
Yeah.
There were just a bunch of websites. You had porn. You had, a bit of shopping, but very little. You
Yeah.
had sports a bit, news. That was it.
Chat rooms, blogs.
Yes,
yeah,
which
stuff
is
like
all great, but
Yeah.
it didn't change anything. What's been happening over the past 10 years has been a game changer. So obviously Uber, obviously
Airbnb, Uber, the way that people have
Yeah.
kind of changed those.
so that's
Day in,
been
day
very
out
important,
activity.
I think. So underappreciating that and singling out a Tesla or an Amazon or a Netflix and saying, oh, look, they're overheated. And we can get into that in a bit, right?
But I'm going to say something. Like, to be fair to my question, you didn't really answer it.
Okay.
Right. So again, I think maybe the question is in the wrong way. I'm not saying that what's been happening hasn't been good. And the moves that have been made fueled advances, improvements in everyday life. Absolutely. And that goes without a doubt. Right. But again, maybe it's more like the way that financial markets are set up. And once they took the decision to do that, do you think it's a sustainable model? Like, will we be able to continue endlessly printing money? Right.
That's their job, right? So the ECB has been printing money way longer, right? So this has been an ongoing process since there was issues in Portugal and Italy and Spain, and since there was issues in Europe, they started. So the ECB started printing a lot of money, and the US got into the game, and now the emerging markets have got into it as well. It's the central bank's job to do that. So you and I can speculate on when the music ends.
Well,
and unfortunately, we will not be able to predict it. Casual predictions
absolutely. No.
are so there are people whose jobs is to maintain. Again, we don't need to maintain hyper growth. That's not necessary.
Yeah.
But avoiding a crash is the ultimate outcome of the cyclical capital markets.
It's a band-aid solution. It's not something sustainable or not. It's just a band-aid solution for the current situation.
What intrigues me isn't necessarily about it being a bandage solution or any. For me, at its core, at the foundation of the system, once the decision, you remove yourself off the gold standard, you create money out of thin air, right? And then you take a decision at some point when things are being challenging to print endless amounts of money, to keep it in the system, to keep companies afloat, once you do that, is it sustained? Like, is there a way that this process and this time frame goes on without a collapse?
Historically, no. So historically, the cycle of the market is
no, but I'm talking about
recession.
I'm
right?
going beyond that. I think this is where I think I'm with you on development and growth. Again, my question becomes around, maybe it's about the dollar, the US dollar. Do you think the US dollar having the impact that it has today, being the central fiat currency that every country holds in the world, do you think that will continue once now these policies have taken place and really opened up the Pandora's box of, you're creating inflation, right? Or no? Am I again, I'm just asking the question. I don't know.
Yeah, so the US dollar is a phenomenon, right? It's to your point, it is the currency that's used to trade oil across the world. And there have been multiple attempts, like our beloved, infamous previous leader infamously tried to change oil trade from US dollar to yen or to euro, obviously it was a joke attempt.
Yeah.
Listen, I think base case is yes, it can continue. To bet against it is a larger than 3 standard deviation event that the US dollar will cease to continue to be the standard of trade globally. It would take a lot, and the euro's already shown weaknesses. Like if it was the euro that was going to change that.
That's where I come. I don't think there's any currency right now that can handle it. Like currently.
Yeah, so crypto obviously is what you're referring to.
That's not even my solution. It could be something like
another fiat.
Going back to the gold standard. Create a fiat currency. Create currency. Let banks offer notes of money to people, but back it up with something. physically actually that has value, intrinsic
But
value,
having that
you can cash
flexibility
that you can cash
is
in.
what allowed us to smoothen
Absolutely.
economic events.
Again, absolutely.
Yeah.
But I think the multiples have lost track. Right? Again,
Yeah, I understand.
I have a dollar of gold. I'm gonna give you leverage at 12 to 1, 15 to 1, 20 to 1, but not a million to 1.
So what you're referring to is dollar as a store of value rather as opposed to dollar as a transactional element between labor and purchase of goods, right?
Well, this is it, no? Yani, I think when people talk of the price of gold going up, right? I don't think it's necessarily about the value of that gold has changed. I think gold is just worth gold. I think what has happened is the dollar is losing value. You're losing buying power. Inflation is kicking in, and
this is a very interesting conversation. Right? I think I alluded to it last time. I think, half jokingly, right? But I think putting your money in gold is a cop-out, right? Because essentially and again, take it with a pinch of salt. Like I'm
100%.
But ultimately, you're removing money out of productivity in the system. The way it is now I kind of like it, right? So the whole point is you have this tool in the central banks, and again, they're not immune to mistakes or corruption or whatever.
They're human.
But ultimately, what you're getting is this tool, this monetary policy that allows you to ride out economic events, allows you to ease, to increase interest rates, to lower interest rates, to increase minimum wage. You can, slow down a hot housing market like in
theoretically,
Toronto.
what you're saying now is theoretically how they should be operating.
And they seem to have been doing it well because we've had a decent run over a couple of decades.
Fair. But again, but comparison to buying value or the actual strength of a dollar.
Sure.
Has lost
inflation has been
99% of its value from its formation or from its establishment.
Yeah, but that's assuming, if you've been investing it at the current interest rate, you would have been fine.
Correct.
You've been compounding interest. And
correct.
Correct. If you're hiding it under the mattress, yes. And if you're doing that, you're better off doing other things. Absolutely. So store of value, there's better solutions.
So that's a very good point. And I think that was one of the points also I wanted to ask you is for the average person, from your perspective. And by the way, I just want to be clear. We are not a financial advisor. We're not trying to tell people how to invest their money and put their life savings. This is for entertainment. This is just what I think, and this is what he thinks, and this is what they think. So anyways,
put it all in red.
Yeah, exactly. If you have a pie, how are you spreading? How are you diversifying your portfolio?
Yeah, listen, I think it depends on your ability to comprehend your investments ultimately, right? Theoretically, the absolute easiest thing anyone should be able to do is the conversation of ETFs, right?
Correct.
Exchange traded funds, right? So that's when you're getting a proxy into the economy without being able to stock pick, which is generally considered the right thing for most people to do. And then, again, I know a lot of people look at it in the classic way of saying, do I put 1/3 in cash, 1/3 in commodities, 1/3 in equities or fixed income? There's a lot of approaches to this. I think you just have to be nimble. Ultimately, the economy has been hot. The US has been doing well. The right thing to have been doing over the past few years is to be invested in the winning economy, which is the US economy at this point.
Correct.
And within it, there's certain segments and certain categories within it. So you don't want to be along Macy's or department stores and big auto. You want to be along, as we mentioned earlier, kind of whether it's tech, whether it's certain kind of rebound plays like airlines, or whether you're kind of trying to time it that way. But ultimately, you should be in interest-bearing instruments, right? So that's fixed income or interest deposits and some exposure to the market, because you don't want to underperform the economy, at which point your buying power decreases.
So cash and equities. And I should keep it on very broad categories.
Bonds, ultimately.
We can... I want to simplify it. And I don't want to make such specific categories. Again, we're just saying things, right?
So in the market or out of the market, basically?
In the market, out of the market, cash versus not cash. An asset like a home. These kind of like overall, you have a pie. It's very general and basic. I'm not asking you how to break down your equity play within the market. I'm just saying X amount to equity or stocks or bonds or whatever, amount of cash, amount of something else. I don't
So
know.
my strictly
Nice
unscientific answer would be 50-60% real estate, 30-40% equity, and 10-20% cash.
I like it.
But that's my profile.
Yeah, that's what works for you.
That's what works
That's
for
your
me.
comfort
That's
spot.
what I think what people, if you ask me as a guy that has a very simple understanding of financial markets, that's the kind of conversations or that's the kind of advice that I want to hear from people.
Yeah.
Keep it simple for me. Make me understand, okay, 60% of your money in a house, 20% in markets, bonds, ETFs, individual stocks, whatever. And then whatever, 20%, 30% cash. That's the kind of, financial knowledge is so under provided to students and kids these days. Like there's no representation, and how important is that?
I completely agree.
For have you, reflecting back, can you think of anything that gave you the tools necessary to be able to manage your money, your investments while you were in school?
No, other than going out there and looking for it yourself.
Which is crazy, right?
Yeah.
So start thinking about the education system and the way that it's set up. Okay, very traditional, memorize this, geography this. But you don't think those tools could be much more valuable to the individual and their ability to succeed and probably make the economy more successful? Because if people are making better decisions.
So we're in the very early stages of fintech disruptions to that model, right? So in theory, there should be extremely simple apps that you have trust with, either banked by a regulator or the central bank, where you transfer X amount of your income monthly, and they give you very simple, back to your point, pie charts, where you can literally allocate, and that includes real estate, right? Because you can do real estate investment trust.
REITs, REITs.
Yeah, you can do cash, bonds, ETFs, and again, it'll be in a very graphic format. So I think there's Mint, there's one in the US, there's a few of them coming out.
What kind of, depending on your profile, obviously they're going to say you're going to have a variety of risk profiles, which will dictate how they'll divvy that up, right?
Yeah, the usual questionnaire. How old are you? What's your risk profile? How far are you from retirement?
So what sort of returns are they on average? It'd be interesting.
Yeah, again, returns are a function of your risk appetite at the end of the day, right? But ultimately, even if you're just deploying it in a conscious way, then at least you're not left out of the market. So at least you're not sitting on cash.
Another question that I wish would be addressed for the average person that doesn't understand the markets. What's the expectation? What is a good return overall, day in, day out? Market is hot, market is not hot. Return on your investments, on your portfolio, on the way that you hold your life financially.
So a very important concept to answer that is return has to be versus the current interest rate.
Correct.
That's very important.
Clear.
I cannot say 5 if the current interest rate in the market is 7.
Obviously.
So we're currently in a 0 interest rate environment. So even a 3 or a 5% excess return over the current interest rate is an excellent outcome.
And that's it.
So today we're in a 0 interest rate environment. If you're making 5% a year, you're doing great. If we were like 10 years ago, or whatever it is, 5-6% interest rate environment, you'd hope to be making 10, 11, 12.
And I think that's what's crazy is observers from the outside in always look to try, and this is, maybe this is my own personal opinion, always look to beat that significantly more. Doesn't sound interesting. 5%. Like the average person, myself included, like, I think I could do better than 5% if I just kind of went in on my own. I don't need.
It's about consistency, compounding, right?
And so that's it.
It's all about consistency. If you compound 2%, 3% from your mid-20s, you're sorted. You don't need to do anything else.
This guy once told me, he's like, if you can get 1% per day for consecutive 365 days a year.
1% is wild, by the way. 1% a day. You're not, like, Warren Buffett doesn't get 1% a day.
No, but it's average it out.
That's next level.
Even averaging out wouldn't even
That's
work.
next level.
I spent a day with Warren Buffett.
Because if
How was that?
if it's compounded, can you imagine? Tell us. Yeah, exactly.
Crazy. I mean, I'm not starstruck by many people. This guy's a legend.
Of course.
I moderated a Q&A with him, and no one would ask questions. They're all being shy, so I ended up asking all the questions. This guy's amazing. So his first job, I don't know if you know the story, right? So when he started as a broker, there was no Bloomberg, there was no Yahoo Finance, there was nothing. So there were yellow pages type books, 2 of them. Each 2 pages are per stock, and you have the financials and the description of each company. So he stayed at the office after work every day, going through each company, looking for any companies that are trading well below what their equipment is worth. Forget what's the valuations these days with tech and everything, right? We're talking about a furniture company that has machines worth $100,000 that's currently trading at $80,000.
Yeah.
And he's like, a year into it or something like that, he found out in the second half of the second book, one of these companies, he bought it, and that's how value investing started. So his philosophy historically hasn't been anything we talk about or find sexy or
absolutely
hyper growth or fun. No, it's been pure value investing. So as long as you find a company that's trading below its book value, that's kind of the technical term.
Yeah,
that's what he buys.
Intrinsic value. So
that's it. And then he added to it something which is considered unorthodox, which is franchise value. So pure value investors kind of frown upon it because he actually puts value on the franchise. Yeah. So if you're Coca-Cola, I'm going to assign you a bit more value, but you got to be Coca-Cola or Wrigley's Gum or Geico Insurance.
Yeah.
And that's it. And he's hands down the most successful investor in the history of.
Yeah.
Well, this is it. This is what I'm saying. Is like when you talk about some of the things that are happening now in this environment that stand out. And this is what I say, Zania. Right now, I'm a little not concerned. You know what? Concerned maybe is the right word. I am a little concerned when you see someone like Warren Buffett behaving in a way that he never used to behave in, right? So gold, he frowns on it in the same way that you said. And then just puts a very small position, albeit, yeah, and it sounds big to people, but for him, it's very small, a $500 million position in Barrick Gold in a mining company. Why, Yani? Why would he all of a sudden do that?
There's nothing wrong with taking cues from what he does or what investors like him do, right? So yeah, that's fair. So his view is that he's worried about what you pointed out, and these are all fair arguments.
From a person that has always said never bet against the economy stresses me out. That's what he said, right? Never bet against the American economy. Gold is just for people to sit. It's like provides no value. It's not productive. You just sit there and you kind of like look at it and pet it. And that's how he said it. That's what.
When did he say this?
Oh, he's been saying this for years. This is what I'm saying. This is the first time he has ever taken a position or has been associated with taking a position.
Against.
So God knows how much gold he holds personally, right? So that we could just park that on the side, right? He may be doing it and just you wouldn't know, right?
Yeah, listen, I mean, it's very interesting. I mean, that's his view. There's nothing wrong with taking a cue from that. He's done this in many industries and people have followed railroads. He's done it in
airlines,
insurance. So it's a very interesting cue to take. I mean, I personally don't take it, but I could be wrong, right?
Again, until you never did economics. Economics, is that your thing, or finance?
Both.
Yeah. So economically, the current system and I came back. I kind of dragged back to the QE thing. This is sustainable. Is there a way that you can look at this and it continues for the next 20 years?
No, I mean, ideally you ease off of it, right? So if they do it correctly, again, historically, it's never been that smooth. So you always get, a few years of a bull market and then you get a depression or a recession.
A hyperinflation situation.
Yeah, I mean, it's either GDP growth or contraction. 2 consecutive quarters of GDP contraction is a recession.
Correct.
So usually it's very difficult. Central banks haven't been able to get this perfect outcome where they maintain economic growth over extended periods. Now, we've been steroiding it with quantitative easing, whether it's in the US or the ECB or elsewhere. And the ideal outcome is you ease off of it as the momentum runs on its own.
Mm-hmm.
Will they pull it off? I do not know the answer. I hope they can. And again, my view is they seem to be managing
right
it
moves,
well,
yeah.
but this can change, policy can change, government can change. You have elections coming up, you can have a contradiction between the House and the Senate, you can have
Correct.
issues in the Eurozone, you can have lower growth in Asia, and China is the big one. So there's a lot of things that can go wrong that can be external to the central bank's
To the
ability to print money.
This has got to be the most polarizing election year in our history,
Really interesting.
right?
It has to be. Because
Lifetime or
Look, I think, again, we talk about existential living and life and view on life.
a lot is
It's
riding.
always going to be the biggest event because that's the event that in present, I'm being a philosopher right now. In present, this is what we're experiencing. So it is by default going to be the biggest event that you've ever experienced because it's new.
recency bias.
Yeah, exactly. You're there, you're living, you're experiencing it. So it is the biggest. But I agree. It is a very eventful.
Like 180 degrees if it goes left or if it goes right, literally. Policy, foreign policy, world finance and economics. And
You
it's
think
not,
things change?
I don't think it's just contained to the US. Yeah, when Obama was elected, great. A black person can be a president, which is amazing. That was polarizing at the time.
Mm.
But it didn't have reciprocal effects to the rest of the world.
The outcome. So that's again question at its core. Do you think things change?
So I'm a bit of a contrarian when it comes to all of this, right? So obviously, kind of strictly from an economic perspective, there was a lot of continuity from the Obama administration to Trump's, right? And there's a lot of minute details about taxes to corporates, to the rich, to the poor, healthcare. So there's a lot of kind of small levers that you can pull. In terms of foreign policy, there's the obvious one, right? The elephant in the room, which is the approach to Iran,
Yeah.
which affects us in the region. So these are all fair game, right? Do I think it's an obvious decision to make for anyone? I don't think it is, right? Because you unfortunately have the incumbent, which is ideally no one should want to stay in the office given statements made and given etc. for obvious reasons. Or do you kind of want Biden, Kamala Harris? I mean, how do you get on that ticket? I mean, how do you get excited about that? I don't know what excites you, but
that's
for
why
me,
it's-
it's not Biden, Kamala.
This is where I would question if the outcome of what happens economically or even politically, and it's whatever's going to happen is going to happen. I'm a person I'm very basic in my views. Whatever's going to happen is going to happen. Right now, the question that's being asked, or what I'm really concerned with, is economically, how would the average person, or should the average person, from your humble opinion, be maneuvering?
In the US, you're dealing with specific issues, right? I mean, here it's kind of all macro and global politics for us.
Yeah, we
So
have the
when you're-
luxury of being, we have the luxury of being a little bit away from it,
In
right?
the US, from my personal experience, kind of spending time there, it's very binary, right? You're either a beneficiary of the left's or the right's policies, right?
Right.
Either you're on the right side of the healthcare
Yeah.
or you're not. You're on the right side. So it's not about morals or black and white or, left and right. It's this guy says I'm going to increase or decrease this tax and I'm going to change this healthcare policy and that affects me in this way. That's how I'm going to vote, even if the guy is not likable, right? So I've seen people that you wouldn't think would be Trump supporters, i.e. rich people, educated people. They will vote for Trump because he will increase their net earning by 2-3%.
By decreasing taxes,
Yeah.
income, corporate tax by whatever percentage, and
Or you could be, of a certain race or a certain economic.
correct.
But it's a crazy time we're living in. You're willing to choose a president because it makes your company more profitable or your business more profitable.
Has it ever been different?
Exactly.
And what else would people vote on?
I don't think it was that open back then. If you go back 20 years, 30 years ago.
I think the outcomes would play out in the same way because that's how things
Well,
are.
we are here today because of those
Well,
past
this is it,
times,
exactly.
right? It was But
Exactly.
yeah, I mean, it's difficult for me to pick somebody like Trump, where I don't believe in that person. I don't believe, like, I'm not saying just Trump, a figure like Trump.
Thank God, as a Canadian, you don't need to pick. That's the
For now.
lovely part, right?
For now. For now, right?
I like me some Trudeau. Are you a fan of Trudeau? He's worked as best as he can in the situation, the hand that he's been given.
Great photo ops.
Yeah, he's so handsome. By the way, he's extremely handsome. He is. So
You heard about his mostly speech, right? The
Mostly?
soundbite when he was trying to say mostly and he said moistly by mistake, and the internet went crazy about it. One of the license plates that you're not allowed to personalize in Canada now is moistly.
Get out of here.
Swear to God, I saw it the other day. People trying to get like personalized license plates where it says moistly on it.
So how long
And
are they
then-
going to keep the borders shut to the Americans? That's pretty controversial.
From the time I was there, when I was there recently, it seemed like it's not going to open until there's a solution.
What's the view? You just don't want the constant exchange of visitors, or
It's obvious. I mean, the general public, for the most part, in the States is not as cautious as the Canadians are. And I don't know how it is in the States, but from what you see and the numbers are coming out,
Yeah. I think there's an impression that it's out of control in the US and the Canadians just feel like, okay, you know what, just to be prudent.
well, they just extended the 14-day mandatory quarantine in Canada.
Yeah.
It was supposed to end in July, pushed till end of August, and now pushed till end of September.
So they're being very conservative with it, basically.
Yeah,
I mean, historically, it's been a pretty closed
not really.
for visitors and not Americans, but in general, like they've
What?
been,
In terms of Canada?
yeah.
Really?
I mean, as an Arab, as to visit there, if you're not, it's not a normal kind of tourist destination for non-Americans,
no,
non-Europeans.
Niagara Falls. I think
Americans going to Canada?
No, Americans obviously.
No.
That's obvious.
expats in general, like just foreigners. We all went to
To
Niagara
visit.
Falls. Niagara Falls. Visit, yeah, before
Local
we
tourism.
immigrated to
Okay.
Canada,
Okay.
we visited Niagara Falls. It's one of the wonders of the world. Guys, if you haven't been to Niagara Falls, you are missing out. It's one of the most lovely
Yeah.
places, especially on the Canadian side, by the way.
It's not only Niagara
What should I
Falls,
say?
Banff. You have it's
No, Canada is
In
something
general,
to be
spectacular.
seen and experienced, right?
How many times have you been to Niagara Falls and not seen the falls? Straight to the casino.
That's just a different topic. Let's say a handful of times. But yeah, it can happen.
Copacabana.
But when you live 45 minutes away from the falls, that kind of things happen. How many times have you been up Burj Khalifa?
Once.
or the CN Tower for that
Once.
matter.
And how long have you been living in Dubai?
12 years.
Exactly. And there you go. It's the same kind of outcome.
How many times have you been up the CN Tower?
Climbed it or
The steps?
I've done the climb.
I've climbed it
as
twice.
well. Yeah.
The steps,
The steps,
The
yeah.
steps.
as opposed to climb it through. So.
That's the only 2 times I've taken it.
Okay.
We did it together one year.
Yeah.
With who was it? Reem Shabender. Shout out to Reem.
No,
She was the one who organized. She was the one who told me about it. About the what's the name of the gas company?
it's not.
Enbridge.
It's Worldwide Foundation, I think, or some
At the time,
NGO or some
correct. But at the time, the main
Enbridge.
sponsor was Enbridge.
That's correct. That's
gas,
correct.
right?
Yeah.
And she was the first person that told me about it. So shout out, Reem. I think they're in Calgary.
Yeah. Working for a gas
Have you
company.
been exactly? Have you been in Calgary? Have you ever?
I've never been outside of Montreal and Toronto.
Me too. Have
It's
you done
huge.
Vancouver?
No.
That's sad.
Yeah, I haven't done Vancouver. I've done.
We lived in Canada for how many years? Probably combined like 35 years.
Yeah.
And none of us went to Vancouver.
Because it's a hike, man, from Toronto.
I've never been to Halifax.
What is
I've
it, a
never
6-hour
been
flight?
to-
8
It
hour
is,
flight?
exactly. It's the equivalent from Dubai to London, to put it in people's
Yeah.
perspective.
It's
Yeah.
huge.
It's a massive, massive amount of land.
And again, I mean, in context of being able to visit the east coast of the United States within a much shorter distance. I mean, Cuba's 3 hours away,
Exactly.
or Mexico, or
And that just kind of distorts
Yeah.
or puts in perspective the image of the map. That tripped me out. I was seeing the kids, so obviously now I have kids and they're going through the experience of the map. And then me being how I am and how I look at things, I was like, you know what? I want them to see a proportional map. It looks very different from what we're used to. So what we grew up on is not an accurate representation proportionally of the landmass to water of the earth. So it's really confusing. So when you see it, Africa is much larger in perspective.
You've seen the picture?
Yeah.
You can fit the US, China. I think like
We're gonna make do some editing action.
60%
right now.
of the world can fit in Africa.
So
Let's look. Hey,
conspiracy.
Dave, let's look in the corner.
No,
Let's all look in the corner of the main camera and see where you're gonna put it. Where you're gonna put it? This way. Go left. Oh, you're gonna put it there. All
it's
right.
gonna sit right here.
Right here. I got it. I'm pointing to it right now.
No, point straight. Yeah.
There you go. So we're gonna show it. It looks really weird because everything that we experienced up until that point was not a fair representation.
It's a
of the
colonial map versus.
Well, look, it's natural, right? Like, it's a very natural thing on how history is written and how people kind of look back at perspective. It's just the most eloquent writer. And this is where we're talking about things that stress me out today. Is it doesn't matter. It's not about the person that is communicating and his ability to be an expert in his space or whatever, or to bring really valuable knowledge. It becomes more about how eloquent you are, how presentable you are. You have really nice hair. You have 3 million followers. All of a sudden, you're an authority. You know what I mean?
I mean, I'll circle that back to the markets. And I, again, slightly disagree in that I've witnessed market efficiency, and particularly in the US, right? So there's this misconception that retail investors and Robinhood investors are distorting the market, and I don't subscribe to any of that. I mean, when you have as many intelligent, greedy market participants whose unintended outcome is market efficiency, I trust it to a certain extent. And I am different to a lot of people in that sense, right? And again, I think that the history is written by the victor, sure, but in markets, there's this balance where you have enough shorters and longs and etc. that it tends to work out with the information we have in hand.
That's exactly what I was looking for from our discussion. That's for me is a theory that can be examined and looked at, right? It's a fair point. Enough people have enough information, especially in this day and age, to be making the right decisions and moving us forward in the correct way. Naturally, default, the system will just carry itself. So
I believe that. And again, you have a combination of quants, right, where you're purely operating on Twitter sentiment, on financials, on many things. And then you have people that are actually crunching the numbers. And again, you don't have to take one side. It would be inefficient if you couldn't short a stock, right? So as long as you can short, and obviously in developed markets you can, then with what we know today, this is the right price, which is why I always argue against inflated valuations. I know they seem that way and you can argue it. And again, that brings us to a very important point in valuations. And again, circling back into tech. The tools we have at the moment to value companies scientifically are broken.
Yeah.
And we have not come up with new ways to value the growth we're seeing in disruptive sectors.
So exponential, it becomes so ludicrous. Yeah.
We can't comprehend it, right? We're just used to valuing factories.
Yeah.
You're just used to valuing cash flows.
Yeah,
correct.
These are my cash flows. I run a manufacturing company. These are my
physical
annual earnings.
assets.
Physical assets or steady cash flows, and I'm great. I'm going to grow them 10% a year.
But this is it. You're absolutely right, because now the ability to grow with the technology that's available is just
So what would you add to that?
Limitless,
What's
right?
missing from that
Limitless.
equation?
It's very difficult because they're conceptual stocks at the end of the day, right? So if you go back to Netflix and you look at a company that was mailing you DVDs to try to disrupt Blockbuster and ends up, being my only
Disrupting Blockbuster.
Now it's disrupting everything.
It's removed
Disrupting
everything.
Rogers, it's
Television,
disrupting Warner Brothers, right? So it's all serendipitous at the end of the day. So if you look at Amazon, you thought you were disrupting Tom Hanks and his, Meg Ryan's bookstore. You didn't realize that you were disrupting everything, right?
Yeah.
So today, and the problem is they're public listed. I mean, if these were private companies, you'd go through these up and downs and no one would know. The problem is they're listing early because it's a good way to access capital, but you don't know what this company is going to look like in 10 years.
Oh.
You don't know what Square is going to look like in 10 years. You don't know which business parallel is going to be the one that's worth 80% of the valuation. So the ability today to say this company is worth X and it goes up by 30%, you say, oh, it's expensive, I'm going to sell it here. It's very difficult. Your best bet is doing what everyone's trying to do, which is saying, this looks like a really good company, looks like they're going to be around in 10 years and they're going to take a lot of market share in the industry. I genuinely don't know what it's going to be worth, but I want to be along for the ride, so I'm going to own some of it.
But I think the equation...
Which is not very scientific.
It's not very scientific. It's very logical. By the way, that's exactly how I invest, to be honest.
Future value.
No, if it's exactly is logically, when I look at this company and what it's producing, do I think that I would be interested in purchasing it? And do I think the masses can see value in it? This is how I look at it at a very basic level, right? But there are trends along the way, and I think it's healthy for people to book profits, right? I think that is the hardest part of investment, is I can put $1 in Tesla today. It's worth $2,000. Now, I don't know if I'm going to be able to earn money for the next year, 2 years. I've made $1,000. It's a good amount of money. Should I take that money and re-enter in a future phase as I use that money to give me a comfort or maybe give me a backup in case things don't work out, especially in the environment we're living in, right? So again, that's where my division of investment becomes such a key issue. Right?
It's a very difficult question. I mean, you might need it. You might do it for tax reasons. That's another thing you don't take into consideration, right? So a lot of U.S. investors have tax implications.
Capital
Absolutely.
gains tax, exactly.
So dividend tax, capital gains tax.
Yeah, but in the U.S., it's structured in a way where it's giving an advantage not to pull your money out of the market, right?
So that's another dilemma.
To keep it going.
Although you might be better off saying, I'll take some chips off the table.
Exactly. Yeah. It's a good time to book a little bit of this benefit that I've gained. Because the worst thing that can happen, and it's happened, I'm sure, to many people, myself included, where you put your money into something, it goes up, and then it goes down. And then you end up with less than what you started with. So you bought something for 100, it went up to 10,000.
Yeah.
And you thought, this is going to transform the world, and it ends up being nothing. That's a hard pill to swallow.
Yeah. I mean, it's very difficult. That's why people equate it to gambling at the end of the day, right? I mean, it is technically a company you have nothing to do with. It's an industry you're not a part of. You're taking a view based on a casual opinion.
Correct.
And you're letting it ride, or you're taking it off. And if you had stayed in, you could have made a lot more. If you did stay in, it didn't work out. So that's the resemblance to gambling.
Tesla. Now this is a perfect segue into the Tesla car. Laith, are you convinced in a Tesla? Would you buy a Tesla?
Definitely. Yeah.
As a car?
Definitely.
Yeah, as a car for sure.
So where does it, so if you have a budget available right now, 100K, that's a good enough budget. Would the Tesla be the outcome of the 100K budget?
It's up there.
100K what?
It depends.
Dollars. Talking dollars would be international.
Depends. Do I have? Am I a single guy living by myself, or am I a married man
Irrespective,
with kids?
I think Tesla has enough options at this point that it covers all of the necessary needs.
Yeah, Tesla would be there for sure. Top 3.
I respectfully would say that anyone that would consider any car except a Tesla today would be making wrong decisions.
And this is the bias element. Again, as I said, we're not. We're just giving
what's that new company? That's
Lucid, Rivian.
Lucid.
Yeah. So those are the only legitimate competitors.
That's what I was going to say.
Are you a fan of Lucid? You think it has potential?
Lucid, I'm on the fence on. So the one I'm pretty convinced on is Rivian.
Yeah.
They're making pretty cool products.
Amazon money.
Amazon money, absolutely.
There's Ion, which is the Chinese
Yeah, the Chinese ones I'm very skeptical. So there's one called Neo, which
Neo,
I'm
yeah,
not sold
Neo,
on. They're
yeah.
publicly traded.
And the one that you mentioned the last time we were on is a big
The
one.
copycat?
Yeah,
Yeah.
the copycat. It's a big one.
Lucid looks okay. They have a big event coming up in a few days where they're going to announce some products.
Do you-
It seems interesting.
Do you think they'd share technologies? So Lucid would get Tesla batteries?
They steal,
Not
they
steal.
try to steal
Yeah.
from Tesla, and there's multiple ongoing
Which is-
cases.
Gonna happen.
Corporate espionage. Yeah.
I mean, Ford built the first combustion engine.
Actually,
No,
the first
they
Ford
did
was electric.
They did assembly.
Uh,
Assembly was their thing.
So, I mean, the problem till today, the frustrating problem is the inability of the large auto manufacturers to disrupt themselves,
Of course.
which is, again, by design and will always go against them. They're not destined to survive this. So,
I find it hard to believe. You're Ford, you're GM, you're Chevy, you're Toyota. You pick a team and you say, listen, you sit in that warehouse. Here's a blank check.
they've all done that.
Logically, the problem becomes what? I think that
They're ahead.
no, exactly.
They're
Is
ahead.
that
Tesla's
you're-
ahead.
Not just Tesla's ahead. Your cash cow that feeds that research is not that, right? So the
That's
way that they fuel,
probably the best way to put it.
that's it. The way
The
that you're
cash cow is the opposite of that. So you're disrupting the cash cow. So you're going to be frowned upon by the powers to be internally. The management, the middle management, maybe someone somewhere will say the right things at Volkswagen, at Ford, at GM. But Namir said it perfectly. The cash cow is the opposite of what you're trying to develop.
Imagine it's like me saying you work in combustion engine development at Ford.
Mm.
They set me up as the guy that's pushing electrical. We are literally at odds. And not only that, I'm at odds, right, with much less financial pull than you. My revenue annually is going to be 100 million. The rest of the company is doing 32 billion.
I know, but in 10 years, that 32 billion is going to be the 100 million.
If you were the strategic CEO that's making these decisions, but there's 1,000 layers in between.
Exactly. And you're not looking at it personally. I'm talking about Laith, the head of combustion engine development. So now I'm talking about you. How would you react? I am coming in to make you obsolete.
Yeah. So they're going to be dinosaurs.
So the irony of the recent events with the pandemic and the, in theory, economic slowdown is that it set the large auto back 10 years in terms of catching up with Tesla, because in difficult times, R&D gets cut, and the first thing they're going to cut it is from this
team that's working on
exactly.
A lot of the major companies did walk away from a lot of the programs that they were into.
They've
right?
walked away. They've downsized them. I mean, we've seen a lot of announcements. We haven't seen a lot of follow through.
Correct.
What do you think of the recent visit by Elon Musk to Volkswagen HQ and meeting the CEO? There's a lot of theories around that.
Look, at the end, it would make sense. I think it's going to end up becoming a survival game.
He has the Gigafactory he's building in Berlin.
Which is awesome.
Well, this is why I think it was a courtesy visit. I don't think people need to read too much into it. But at the end, it's going to make sense to have electric vehicles operating purely out of the lack of damage to the earth that we need to survive off of. I think it's going to become that simple of an equation.
So I argue that from a capitalistic perspective and say that's missing the point. It is a great unintended outcome. They're just better, cheaper, more efficient machines.
That, what you're talking about now, that is exactly, it's the same thing. What I'm saying is ultimately what ends up being the best for the earth will always find a way to become the best and most efficient way to develop. And that's how I look at it in this thing. Like, this is so clear. You have an option that creates a lot of damage when you're trying to get the fuels to push it. And you have something that is helping that situation, is disrupting it, is actively working against that. It gives it a huge advantage. It's not something to be underestimated in terms of value. That's a value. significant value.
The funny thing is, a few years ago, that visit could have been construed as Volkswagen buying Tesla.
Exactly.
And now it's being viewed as Tesla
It's buying Volkswagen, which is
That's funny.
crazy.
That's funny.
By current value, by current revenue
Yeah.
capability, right? Right now, Volkswagen could buy 10 Teslas.
So Tesla raised $5 billion last week at a
Yeah.
1% dilution to the company.
Did they capitalize it? Like, did they take it off the books? Because I heard that they had opened it up where they are entitled to sell stock
They did it. They
At
did a
any-
$5 billion raise.
at any price. No, I heard that they left it open to give them the option that they can sell it whenever they need it.
It was a one-day event. So they sold $5 billion worth of stock at the price on the day at a 1% dilution to the company. These capital raises happen in one day.
Okay. Because in my understanding, and maybe this is it, I misinterpreted it.
Which is access to capital markets. Again, the whole point,
Correct.
we missed the point, right? We keep talking jokingly about gambling and
Hmm.
you buy, I buy, what it means. But ultimately, the point is access to capital.
Yeah.
So a company like Tesla with 3-4 factories was able to, in one day, raise enough money to build a fourth or fifth factory
Exactly.
at a 1% dilution from the market in one day. So that's the whole point
Yeah.
of these markets that we forget sometimes.
Yeah.
Why do this anyway, right? So the whole point is growing companies get access to capital that they wouldn't otherwise,
Yeah.
or at different terms to grow.
Yeah. No, this is it. This is, I think, again, man, it's so hard for people that aren't in it. And myself, again, I keep saying myself included because by default, when I'm speaking, it's the only perspective I can take. It's hard to register a valuation of 400 billion on a Tesla. And then, by the way, I'm in. I'm sold. I've been selling the idea of Tesla for a long time now. It's hard for people to understand that it's 400 billion. It's worth more than all the major car manufacturers today are worth combined.
It's easy for me to understand how it's worth more than all of the manufacturers combined. It's hard for me also to understand that it's worth 400 billion. So that's what I said earlier, right? It's very hard to conceptualize the valuation of these companies these days. The models we have don't work.
Yeah.
What is easy is to understand that it's worth as much of all of them combined because none of them should exist in 10 years. So that's the easy part. But is it worth a quarter of Apple? I don't know the answer to that.
Yeah.
Apple's at 2 trillion.
Insane.
Yeah. For a company that hasn't been innovating in theory, right? I mean, the criticism of Tim Cook is that he inherited a bunch of products. He's been improving them. He's been extremely good at it. There hasn't been any major product disruptions from Apple, yet it's worth $2 trillion.
I would. This is where I think I would challenge you because I think it's similar. It's a similar story to Google, right? Or Microsoft. It's the ability to make your day in, day out revenue stream into a subscription model.
Agree.
And I think his ability to transform how they were earning their money was innovative in itself. And I think that's why a lot of people love Tim Cook, right? Because of that. He was able to take, okay, I have this amazing product. You're right. It hasn't innovated a lot, but he's been able to transform or reshape the way you interact with it, where he's getting more money from you, getting more cash.
That's what Microsoft did.
Usable
So that-
cash, exactly,
Yeah.
right? So Microsoft went from selling you
To taking a subscription.
subscription.
On
So
all
every
price.
year you pay $200 to get your Microsoft, which meanwhile before you used to buy it for $100 or $150, and now would stay your Microsoft for 3 years.
Yep. Agree.
You know, I think that's where the innovation or
Software as a service.
exactly. But I think that's where Tim Cook is valued, why they like him. I agree with you that the thing that they like about right now may come back to haunt him later because that development and innovation is what's going to keep companies ahead of the curve and prevent Teslas from showing up. But it's just the nature of people, right? They're just going to want to cash on their investments.
My experience. So you're absolutely right. My experience is that we're still running from the momentum of the innovative period we had under Steve Jobs. So Apple plateaued. Obviously, they brought him back. He went on this ridiculous spree of ridiculous,
amazing.
right? From the iPod to iTunes to the App Store to the Mac to everything.
Everything.
And he's just been, Tim Cook has been perfectly managing it and perfectly
He squeezed
milking it.
Yeah, squeezed every bit of it. But now it's time to.
But then eventually you have to do something. So Microsoft had that phase where they had this innovation in the 80s and 90s.
Yeah.
They plateaued with it for a while. So then the new CEO was able to revive it.
Yeah.
So I worry about Apple.
And you would in turn also worry about Microsoft.
No, Microsoft is the opposite.
Because they went into the cloud business and
Yes.
that's the majority.
Salesforce, Microsoft.
Did they buy? So Microsoft owns Salesforce? No, Salesforce is its own.
They bought LinkedIn. No, Salesforce.
LinkedIn,
It's
okay.
CRM, yes.
Yeah. Okay.
But Apple I love it. I love Apple. I'm a fanboy. I worry about the stock.
So you have investments in Apple?
No,
Okay.
I worry about it. Which again, it's done great, and so the theory for Apple, given recent events, the past 6 months, is that the more we work from mobile, from home, from the road, etc., the more you need general technology, and that's where Apple kind of is involved in every step of that. So they're beneficiaries of the recent events, where anything that you use in your daily life, so you're more likely to upgrade your phone because you're spending more time working on your phone and your tablet, on your laptop, your computer at home. So they benefited from that. But again, we are in the age of disruption, and they've not done anything. And the new trends that we're seeing, whether it's...
You don't think they're playing Apple? I'm a big fan of their playing Apple TV. What my
That's
interpretation...
been a massive fail for them.
But you know what? I think it's the long play. My interpretation of that play is they're wanting to be the physical console that every household has, and it accepts interaction with all. Like, have you seen how they do the platform, the ITV kind of setup?
I think Apple is losing that battle. I mean, that's one.
Fair point.
I mean, any Samsung TV I'm singling out Samsung, but any LG, any decent TV
should be able to have
smart
apps
within it covers your needs. They haven't been able to do the content game. They haven't been able to do the hardware game. They haven't on TV specifically.
I think they're focused on. I think if I were to predict or project what I think they'd be doing right now, is they're trying to make that experience while you're going through Apple TV and finding the shows that you're going to watch, irrespective of their own content, right? To make it as pleasant and as accessible and as easy and as interactive, one-stop shop, same way you get apps from the Apple Store and you're taking, I think they want to set up on the TV game in the same way.
I have one answer for you. Steve Jobs is rolling in his grave. This is not how he would have wanted it to play out. None of this would have been.
How do you think it would have been like he invented?
He would have either not done it or done it properly.
I agree.
The way Apple TV has been able to linger as a mediocre, I love it. I use it, but it's a niche. It's not a big contributor. They're not top 3 in their industry. It's not the Apple way of doing things.
Well, the Apple way of doing things is innovation.
And it's top 3. It's top number 1, top 2. It's not going to be one of your 10 options. You kind of like it. It's a niche product.
Yeah.
He's not happy.
And that's the problem with having your company based on a guy.
Big time. That's my concern. If you ask me, what's your number one concern with Tesla?
It's Elon.
Is the contribution of Elon.
Yeah.
Right? Like that stresses me out.
I think he's put enough momentum that I think if he leaves for the next 10 years, it'll be great, but he'll fall into the Apple trap where some CEO is going to come.
Able to innovate and think.
He'll manage it properly.
I see your argument that the innovation has been done. Now it's execution. But that's one element of it. So if we're talking about software and ride sharing, that's not been done yet. So if you're talking about 10 years from now, cars are all electric and Tesla is going to have a 10 to 20% market share. In theory, he doesn't need to be there for that. So if that's the company, it's probably worth a lot less than it is today, but it's still very interesting and extremely relevant. Currently. But the plans are very different. It's to take over energy, it's to take over mobility, autonomy.
This is where my concern comes.
So I agree
about.
with you. If that's what you envisage, then you kind of need him, and that's your risk, key man risk. If the point is executing on the electric revolution, then that's in motion.
Yeah.
So it depends what you see happening over the next 10 years.
That's where that's where people struggle to value Tesla. Is people are still doing the calculation of how many electric vehicles can they produce and how much revenue will they get out of producing those vehicles. If you do that evaluation 1,000,000 times, it's not going to reach 400 billion in terms of the market cap of the company. But
it's bigger than that. I think that's. But that's.
Well, this is it. This is exactly what we're saying, right? It's much bigger than that. The power game, the battery game, just every vertical that they're entering into, they're creating and leading or trying to lead one way or another, and they're massive plays. So
I don't know. I see the future where we talked about it, which is car as a service. I think that's where
which is huge. I mean, you're
massive.
repurposing parking lots. You're talking about prime real estate. I mean, I joke about this, but I would be short parking lot real estate plays in New York and LA, right?
No, but they can adapt. But by the way,
100%.
they can adapt. They can be charging stations.
Charging, so that's, I mean, if you want to get into that, so charging should be destination charging rather than dedicated charging. So if you have it in your apartment building, if you have it in your home, if you have it in your mall, in your work, then the idea of the gas station being repurposed as a charging station or a parking lot, I mean, listen, at the end of the day, a parking lot can become a condo tower, right? So I'm half joking about it. But ultimately, car as a service is a game changer, and it's so obvious because, again, what utilization do you have on your car on a daily basis? I'm on 2% probably.
At best.
Right? So it's ridiculous. And it's
At
the
best.
most depreciating asset you own in your lifetime.
correct.
I mean, we stress about, $1,000 purchases, but we're depreciating multiple times of
Our
that.
second largest, for the average person, the second largest purchase that they make, right? So you make a home purchase and then a car.
But one is an appreciating asset,
Well,
and
this
one
is-
is a...
It's not an asset. A
I'm
car is
just
not an
The
thinking-
asset.
house is hopefully an appreciating
Yeah,
asset,
correct.
whereas the car is...
The
A
point
liability.
That's the worst purchase you make in your life.
Well, this is it. And that's the point I think I'm making where I deduce from it the Tesla business model, right? And again, even the Uber model, like the combination, the hybrid of that model makes sense for me. Because exactly what you said, people right now are committing most likely the second largest investment that they make in their life in general. So it's the car and the home. And it's as you said, literally the worst investment. It depreciates the second you sign the document. You signed it, you don't drive it off the lot. You list it to sell it, you're getting less money. It's literally like that. So I agree with you, man.
Unless it's the Shelby GT500 Venom.
That's like winning the lottery. You know what that's like? Collecting cars is like collecting figurines.
Yeah.
It's like you keep them in the box and you hope, like, please, I hope 30 years from now, Hamdy, when he's worth $3 billion, is willing to drop $2 million to buy this. this
Shelby.
What's up?
By the way, do you think a Tesla would survive an EMP or a solar flare? Has that been tested?
That'd be interesting. All the cars of the world stop at one moment.
Right?
Imagine that happen.
Like a zombie apocalypse or something. I think I'd want a petrol.
Theoretically, is that possible? You have a science mind. You're a smart guy.
What's the question?
Imagine there was like a solar flare from the sun that kind of like...
Satellites get messed up. Everything gets...
an electrical pulse gets shot out for some random event from the sun that would create an electric
EMP.
surcharge. Yeah. Would shut down the world. Would just go dark.
So then you would want a gasoline vehicle to get to a safe place.
I want two things in that scenario. Gold and guns.
Yeah.
There's nothing. It's not Tesla.
Cigarettes, guns. I'm good to go. Go all jail mentality at that point. Oh, man, that's good. Zombie apocalypse.
Gold and guns.
Yeah? Texas.
Love it. Hamdy. It was really good, man. And you know what?
Yeah.
By the way, we didn't say the date, so it's September 5th. So we got to put it out there. So everything that we're saying, these kind of theories, has a place, and we'll see however it plays out.
Happy birthday, Tina.
Tina Turner?
My sister.
Oh,
Happy birthday, Tina. Wishing you the best.
happy birthday.
25.
Almost.
What is it? Oh,
You never say a
Awesome.
lady's
I know, but I'm
age.
saying it's a nice number. I don't think a lady would be offended by 25 in any scenario, unless she's like,
19.
yeah. But I know Tina's not 19, so.
About 25.
Okay, cool. That's awesome. Subscribe, like, check the channel out. Thanks, guys. Much love.